Hi, Natasha. How are you?
Hello, I'm fine. How are you?
Great. Lovely to speak to you today.
Yes, absolutely. So, and huge topics, limited time. Let's get to it.
Good. Let's get started.
There was no real way to predict the devastating economic consequences of the coronavirus pandemic. Tell us, how did it impact your business?
Well, when it happened, we moved very, very quickly. We're an organization that was built in the cloud for the cloud. So it was very easy for us to transition all our people to a safe working environment, working from home, and everything worked to clockwork. We all went to our various places and started working away. We didn't really know the impact on our organization. What customers, um, you know, continue to work the way they'd worked over the last couple of years, or would we see changes of behavior? But all of a sudden, the world was going digital. People were actually shopping online. People were embracing everything that was digital, and therefore we experienced huge numbers, great amount of engagement, and our people also embraced working from home quite well. We launched products very quickly. We never furloughed a single person. We were having record months. Um, but it was not very nice out there. Lots of our customers and lots of people in the UK were really suffering, and we were listening to what they had to say, and we launched products specifically to help people who are self-isolating. A connected card, which is all about helping people in that very, very hard circumstances of actually having to self-isolate. And we got that project out there quickly, and the NHS volunteers recommended us. So we were really listening to what people had to say and really responding.
It's really interesting because now, when you're talking with the benefit of hindsight, everything seems to have gone really, really well for Starling. But I know at the beginning there was a bit of a potential wobble where you said, profitability might not happen by the time you wanted it to happen. At the moment, Starling Bank is the only neobank on track for that profitability. So, how important do you think profitability is at the moment and sustainability for both you and other neobanks? And how long do you think your competitors can survive without passing that test?
It was quite scary when the pandemic happened. We were on a path to profitability, but I remember having a board meeting and talking to the board members saying, this could stop us in our tracks. Our customers may decide to do nothing for a period of time. But it only lasted weeks. We were very, very quickly able to respond, and our customers loved the non-branch experience. Whilst our competitors weren't answering the phone, we were open 24/7. And we believe that profitability as well as sustainability is very, very important in this market. We've always believed that making a profit within a reasonable period of time is something you have to do to stay in big business.
Yeah.
We have never really sought customer numbers for the sake of customer numbers. We have been unit contribution positive. That is, each and every account makes a profit for over a year now. And we will be monthly profitable by the year end. And I think that's important. And it what differentiates us, as well as the fact that customers love us and are sticking with us in these difficult times.
It does seem that regulators are very much pushing for that to be the case, not just for neobanks to turn a profit, but also to prove that they can be sustainable. How much time realistically do you think your competitors who aren't going to turn a profit by year end have before they're pressured into doing something, whether it's consolidation or doing something drastic to change their fortunes?
I think this market of neobanks is quite wide. There are organizations that are banks and ones that are not banks. The ones that are not banks have to find other ways of getting revenue. We take in customer deposits, we lend those deposits out, we make net interest margin on that, and we also make interchange, and that's where our profits come from. But the UK regulators, the PRA and the FCA, who lead the world on banking regulation reform and is setting the pace for innovation and competition, have basically recently launched a consultation where they're saying, well, 5 years is probably enough. 5 years is what it takes to be profitable, and we want you to do it in that time period. And so, the banks that got licenses in 2014, 2015, yeah, 5 years is coming up.
Do you think that's fair though? Because obviously when you think about tech companies in general, a lot of them had, 10, 12 years to make a profit, whereas there's a lot of pressure and a very difficult time for a very fast moving part of the sector, right? I mean, is that, in your opinion, a bit of a fair or unfair situation for them to find themselves in?
Uh, Tech companies are supposed to grow and grow and grow, take more and more revenue, more and more market share, and worrying about profitability later. Um, Banks benefit from the financial services guarantee scheme. So, if a bank fails, well, the taxpayer sort of steps in and compensates all the depositors. And therefore, it's not possible to take this very, very risky approach forever. Banks are, Starling Bank, we're a bank, we're a tech company, we're high growth, we're also profitable, and we take our obligations to the regulator very, very seriously.
Yeah.
Yep, some companies, they can be loss making forever. For a bank, I think we have other stakeholders,
Yeah. I
and
mean,
we have to do the best by them.
you're quite right. And I think it's really interesting because obviously it's not just pressure from regulators, right? Over this pandemic, we've seen a massive amount of media coverage of your sector, a lot of headlines, a lot of worrying kind of elements there. I mean, it's not been so much Starling Bank, but certainly your competitors in this space that have been hit by, questions about their future and whether they're going to exist in the coming years or not. Do you think that coverage has been fair? And how much do you think that's impacted consumers' views of neobanks in general? Because I can imagine that has had a knock-on effect.
I think that the Starling Bank's always said we're a bank. We've been very, very forthright. We say you're a bank. Sort of you benefit from all the safeguards of being a bank. Um, and for um, and for many years we were the underdog. We weren't as big as Barclays, and therefore, the press was probably a little bit sort of fairer. Now we're a big organisation, and we were up there competing against the big banks because that's where the market share is going to come from. As far as the other segments of the industry, the peer-to-peers are having a hard time. The banks that cannot do lending, or rather the non-banks that cannot do lending, are having a hard time. But we take advantage of the press in the good times. It's only fair that we have the right amount of scrutiny in the bad times.
Oh, that's a very measured response for sure. I was going to say, obviously, it's interesting that Starling Bank is the standout bank, the only one that has been able to sort of weather this crisis quite well within the neobank sector. I'm wondering, how much of that do you think is due to the fact that Starling has been loaning to businesses? Because that seems to have been a big part of what has brought in a lot of the sort of possible revenue for Starling over the last few months, right? Rather than the consumer side of things.
We have a quite a measured and balanced revenue stream. We first of all we use our own technology platform. We have our own engineers. We build things. Our cost base is very efficient and very fast moving. We have interchange, which is when every time somebody uses their card, we have a small cut of that fee, and that has recovered to normal levels. We are not so dependent on international travel as some of our competitors. We have something like 5 or 6 times the average balances in those accounts compared to one of our nearest rivals. So we have people who are slightly different demographic, spend a bit more money, and they have not been impacted so much by the lockdown and the crisis. But of course, yes, we also have been lending. We will do nearly 2 billion of lending in 2020, and we have and that doesn't come without certain responsibilities, we know. But we last year, a couple of years ago, we won an award of 100 million from the Capability Innovation Fund. And that was a grant to allow us to build the best SME, small business lending functionality in the world. And we've done that, and we've been able to use it in this crisis to get lending out to the right people. And all of this together means that people embrace the proposition. Our numbers are growing very, very fast. Our customers continue to sign up, and we're open for business 24/7.
Yeah.
And we're open whilst some of our competitors, the big banks, are closed. And that means that we've been able to be there for our customers in these very, very difficult times.
That's fair. And I think it would also be fair to say that this entire pandemic has been a huge trial by fire for neobanks. What do you think is going to happen next? If we're looking into sort of the future, let's say 2021 and ahead, what can we expect to happen? What are your predictions?
I think there's going to be, in the fintech sector generally, there's going to be some fallout in peer-to-peer, where in sort of private investor behaviours changed. I think that those products that are very, very geared towards forex, foreign travel, are going to suffer. I very much hope that this will be the big move towards digital. We've managed to move perhaps 20 years in people's attitude to digital-only propositions. I think the big banks are going to start closing down their branches. I think cash is going to come under pressure. I think we're going to, have far more mobile wallets and using a plastic debit card. I think that this is going to be, it's going to advance the position of digital banks. And in the next couple of years is when we're going to take real market share from the big banks.
Yeah, it's interesting because a few years ago, the neobanks obviously had the advantage of technology. Now, traditional banks are very much caught up on that front. Where do you think the battleground is going to be next? Because it's going to be about differentiation, right? About who can connect most with their customer base.
The big banks can copy everything the new banks do. What they do is they build this technology, this new feature set by building on top of existing technology. So they take existing technology and they basically build on top of it new features. And what that does is increase their cost base rather than reduce it. Mm-hmm. We have new features, great customer service, coming top of all the promoter score lists, but on a low cost base. And that means that we can create a sustainable, profitable business. We're going to take on the big banks in this world, and we're going to take them on the cost base and the profitability, not necessarily in the features. We'll have the features as well, but they'll copy the features. But we will outrun them in terms of our profitability.
Do you think there's going to be more competition? Will we see more neobanks, or do you think this is going to be it? Because in this race, obviously, you've got the advantage of time, and you've innovated enough to stay ahead. Are you worried about them being more people, more companies coming behind you?
There haven't been many new banks coming to market since 2015. Yeah. What's actually been happening is that people realize it's really, really tough to build a bank and support a bank and continue to grow. And we have a small handful of banks around the world that have got to this position. There are new banks coming up. They will give us a run for their money, but I think that it'll be something different that disrupts digital banking next. It won't be more of the same sort of bank that we have at the moment.